I started crypto 8 years ago with just $2,000, and within a few short years, I turned this into $5.2 million. Then I had every single penny stolen from me. So I made it all back again and more. Now I'm giving you the full playbook, every single brutal lesson that cost me years of time and millions of dollars in one single video. And this is the exact advice I wish somebody had told me when I first started. So let's get into the video. So that brings us to lesson number 1. You need to understand the difference between trading and investing. Because trading is taking a few trades across hours, a couple of days, or across the week. This is trading short-term price action, and you are timing the volatility in the market. Let's say the market's trading like this. You're trying to trade here, taking profit there. Very, very simple. When you trade this method, you need to compound your wins. So when you take one win, you need to keep the money in the account until you keep compounding those wins again and again and again until your account grows large. That's how you go from a small account to a large account. And with trading, you can always make money 24/7, 365. You can long, which means you buy low and sell high. You can short, which means you sell high and buy low. You can long for a longer period of time, i.e. across the week, or you can long for a shorter period of time or across a few hours, let's say. But you need to understand the difference here. You don't buy and sell a token trying to trade it, and then you just suddenly hold this trade that you were supposed to hold for a few hours for the next few weeks. And then what you do is you intended to buy this token as a trade or a leverage position, and then it turns out to be some investment. And this is when things go wrong, because you originally had the idea that you were going to buy it for a shorter time frame. You were trading, let's say, the 15-minute or the 4-hourly chart, but next minute, you're holding this coin for the next couple of weeks. And what happens then is the price tanks and you lose money. So what you need to do is have a clear stop loss and have a clear plan when you are trading crypto. Or you have an area where you can just cut your trade on a longer time frame trade. Now, this comes to investing. This is when you buy a token for months. You buy and hold it, you accumulate the token on low when price is low, and then you sell the token when the asset goes up in value, and then you sell high. You are timing and anticipating asset appreciation. For example, price is accumulating low, it breaks out, then you sell high. You do not buy high and sell low. That's the opposite of what we want to do in investing. You can scale up an account pretty quickly with trading, but with investing, this is where the real wealth is made. And there are only certain times of the market cycle, of the crypto market cycle, that you can make money. For example, a bull market. You can only make money investing when the token price goes up. If it goes down, you lose money. So there are only certain periods of time when investing works. So understand the difference between trading and investing. Do not buy the token as an investment, and then you just suddenly start buying, selling, buying, selling, buying, selling. And now you bought this token as an investment, but now you've turned it into a trade. So what you need to do is you need to have a clear buy area, for example, down here, and if it breaks below, you cut the investment. And then if it breaks above, this is where you make money and you scale out. Don't get chopped up in this area by buying, selling, buying, selling. You are investing here, you are not trading. Understand the difference between the two. For example, through trading, I've taken account from $3,000 to $2.5 million in a single year. And as you can see here, I've taken an account from $108,000 to $324,000 inside 30 days. And with investing, I've made over $5.5 million using this system here. So both are extremely profitable, but you need to understand the difference between the two. Don't go into a trade and turn it into an investment. Don't go into an investment and turn it into a trade. That's the key difference. So lesson number 2, operate inside your edge. An edge is where you have a competitive advantage over somebody else in the market. Maybe you have better technical analysis skills. For example, you were able to spot a key SR level. What do I mean by this? You are able to identify the best support level, which means that when price comes into the level, you buy here and then you sell higher. Whereas somebody else may identify this level here, so they buy here, but then it breaks through their level and then they sell here and then the price goes higher when they should have had a better level. So you have better technical analysis skills and you are able to read the chart better. Or you have better fundamental skills. You can see whether the team are good, what the team are doing well, i.e. is this tech good? Does this have a use case? Is this meme popular? Etc, etc. Or what you can do is see narratives before everyone else. For example, I was able to spot the DeFi narrative before it became popular. That's how I was able to buy coins like Rune, Chainlink before they got big. The same with meme coins. That's exactly how I was able to spot meme coins and pick coins like Pepe before they did a 40x. Or you know a team and you have insider information. This is a bit of a gray area. And then you have knowledge before everyone else. Or an edge can be that you can afford to be more patient than everyone else. What this means is that you buy a token, but you don't need that money in the next couple of months. So what you can do is that you can afford to be patient to hold that token through an accumulation period when you are investing, and then price goes higher, and that's when you are able to make money. Let's say if you're investing with money that you need next week, then you cannot afford to be patient. So being patient is the next point. So we're going to cover that just shortly. So what you need to know is what you are good at, and then if you know what you're good at, this is how you win. And if you aren't good at anything, well then get good. And obviously my YouTube channel is the best place to learn that. And so if you're following somebody on Twitter for an edge, then you're not going to have an edge, because how many times have you been on Twitter and somebody has given you a trade that has changed your life? It probably won't happen, because 90% of people lose money in this game because they don't know their own game. Right? If you're following somebody else's call on Twitter, then you don't even know what your own edge is. Is Twitter really an edge? I don't think so. So everyone watching this now does have some strength somewhere. You don't have to learn every single edge that I have just mentioned. What you need to do is pick one and stick to it. Then once you have found your own edge, make sure to build a team around you so then the other people can cover the areas where you are weaker. For example, if you are a great technical analysis trader, but you fail to identify narratives early, then you need to find somebody and team with them that you can match your technical analysis skills with somebody who is great at fundamentals. What this does is that somebody who is great at finding narratives early and finding great coins with great fundamentals, you can pair up with them. And you can use your technical analysis skills to complement both assets. Therefore, you get the best of both worlds. Now, I personally believe that the easiest edge to gain is patience. Now, the reason being is because if you cannot wait for a pullback, then you're going to FOMO in. Patience is just more than just waiting. Patience is what prevents FOMO. If you cannot be patient, you're going to FOMO buy a coin up here, and then what happens is the coin dips, you sell, and now you are forced to do something you shouldn't even be doing. You should really be buying the coin down here, requiring patience. You need to be patient for the coin to pull back. Down in this area here, this is where you buy, and then this is when price goes up. But if you cannot be patient, then you're going to FOMO in and lose money and buy the top. And if you can't be patient for 100x gem to come along, then you're just going to buy random trash in between that gets your account wrecked. And if you can't be patient to sit through a coin that goes through 50% drawdown, then you're going to miss out on future gains. For example, coins do this all the time. It goes up, it pumps, it has let's say you buy in this area, it pumps, it has a 50% pullback, right? You believe that you're going to lose all your gains. So what happens is that you are not patient enough to let price action unfold. This is a 50% correction. You sell here, but you aren't patient. So then price goes up even higher. But if you were patient enough to sit through the drawdown, then you would have been rewarded with even more money. So if you can just wait for your setup, i.e. price pulls back into the area that you want to buy, or if you can sit on your hands and let the trades come to you, you can wait for a 100x coin to come along, then you have already beaten most of the market. And this is the real edge, because even Warren Buffett said this himself. The market is designed to transfer money from the impatient to the patient. And in crypto, this hits even harder. This isn't a 9 to 5. You don't get paid by doing stuff just clicking buttons all day long. What do? You get paid by being early and buying low when everyone else is panicking, then holding, then selling higher. This is boring for most people because you have to be patient. You have to wait. But to me, what is fun is getting paid from this, not all of the emotions in between. We're here to get paid. So your best edge is going to be patience. And look, you're never going to catch everything. Some of these impatient people come along thinking that they have to catch every single move across the board. And at the end of the day, you only have a certain amount of capital. And this is crypto. Coins pump every single day. There is so much opportunity out there that you simply cannot catch everything, or you cannot have your eyes everywhere. You have to accept this. If you catch a 50x, there is going to be somebody else out there that catches a 100x. So even if you do catch a good play, don't get jealous of the other person who caught a 100x. And this is what many people do. They let comparison be the thief of joy. Let's say if you buy meme coins and you do very well on them, and then AI starts to do very well, but you think you missed out and that you need to buy both. You don't really need to, because you've already made money in the meme coins. Just stay in your own lane. You are trying to make money, not be right and cool loads of things. Because the big money is made by riding the coins that you understand fully, not by jumping on to whatever's trending. And as soon as you start to jump on whatever's trending, then you are now operating outside of your edge. And as soon as you operate outside of your edge, this is the moment that you lose money. And I cannot tell you the amount of coins that I have fumbled and missed. And I have spoken to tons of veterans in this crypto space, and look, everyone has done the same. For example, I bought Cake here, PancakeSwap, down here at 40 cents. Then I sold it here for a quick 50% pump. Then what happened is it went up to $40. What did I miss out on? An 80x. So look, it doesn't matter, because later on I focused on what was next, and then I caught Rune, I caught Shiba Inu, and I caught many, many more. So look, there's going to be tons of coins out there. Just stay in your own lane. And when you do make money, always be taking profit. Not in a way that you, as soon as your position, let's say your entry's here, and as soon as you turn green, just take profit. That's not what I'm on about. But let's look at the common problems that most people face. You buy something down here, it pumps, and then what people do is that they round trip all of that profits. Or something pumps, for example, my cake long, it went up 50%, and then it just continues on pumping higher. They're the most common problems. And what they do is then they end up FOMOing after it's already 80x at the exact top. So how do we fix this? Let's say you buy something here, you buy here, and then it starts to break out. You then slowly start to dollar cost average, DCA, out of your position. You do small sells every now and again as price starts moving up. So what you do is that you get an average exit between here and here. And then number two, if you do want to sell in one single go, then I'm going to teach you how to do this in the next lesson. So let's say if you just want to go, boom, one take it, then I'm going to teach you just shortly. And look, early in a market cycle, it's okay to hold your positions. And it's okay because most people are fearful of doing so because of the previous bear market. When the bull run starts and we break out of an accumulation period, everyone is scared to hold positions because they are adjusted to this volatility in here. Then when the candles start getting big, they think and they believe that the candle is gonna reverse on them. But as things heat up and the bull market continues and rotations pick up, which means that capital rotates from a coin to the next coin, this whole market cycle starts to speed up again and again and again. That's why when the beginning of the bull market starts, you see a few big runners, for example, like WIF, like Bonk, like Pepe, you see a few key big winners. But then as the cycle develops, these market cycles start to speed up. They start to pick up and they don't pump as hard, which means that people then keep holding the bag. They are trained to hold, and that they end up giving all of that capital back. And if you don't exit, this is where you're going to get left behind. And this is why retail are always one step behind, because they just go off learnt behaviors. It's exactly like that social experiment when everyone's in a room and then they stand up and down when they hear a beep, and then everyone joins in, just like this.
It doesn't take long for our test subject to notice a pattern. Beep means stand up.
This social experiment is exactly the herd mentality, because what people do is that they get sucked into the madness of the crowd at the end of a bull run. So what happens is that at the beginning of the bull run, people are afraid to hold tokens. And then as the bull run develops, people get a sense of security of holding tokens because they generally usually go up. And then when people get used to holding tokens, then price comes crashing on down, and that's when they lose money. So another one here is if you screenshot your profit and loss, just close the trade or at least sell some of your coin, because that emotional high usually lines up with the top of the cycle. Let's say if you have a big P&L and there's a large candle to the upside and you're long, that large candle is a spike in your emotion, and it's usually a time to lock in profits. And the same goes to the downside. If the red candles make you go, oof, oh, that's a big one, then it's usually an emotional and irrational spike, which means it's usually time to buy for a bounce. You can use emotions to trade that way. So lesson number 6. Once you exit, it does not matter what the market does next. If you do sell your position in one go, even if it's at the right or wrong time, it does not matter. You've already made your move and you've already made your money. If it's 10x and if you sell and then it continues to 10x, who cares? Because you've already bought the coin as an investment. Let's say you bought it down here. You bought the coin as an investment and now you sold it all in one go, but now you want to buy back up here because it's continuing to pump. And now what's going to happen is that you're going to continue to trade this token, which goes back to lesson number 1. Is this a trade or is this an investment? Because if it continues going up, right, and you rebuy it back as an investment, and then what happens is price pulls back, you're now going to sell that position, and now you're going to start getting chopped up, and you're going to treat an investment as a trade. That's what usually happens. So always have a plan and go back to lesson number 1. Is this an investment or is this in trade? And the only thing that matters here is your entry and your exit. And did you make money from this? Nothing else matters. If you sell here all in one go and then it crashes, who cares? The only thing that matters is your entry here and your exit. That is it. Nothing else matters. And did you make money? Some people try to obsess over every single move and try to make some rationale over all of the volatility in between. So number 2, once you sell the coin, don't be that guy that obsesses about a single coin and then marries the bag. The only bag that you should be marrying is Bitcoin. This is the only one that you should really be focusing and paying attention on. But for altcoins, what people do is that they think they made money on a particular coin. Let's say they bought it low and they sold high. And then they obsess about this particular coin, that this coin here is the only coin that they can make money on. So what happens is that they end up rebuying it back time and time again. And it's like some magic coin to them. So once you get in and make your money, get out and then move on to the next coin. Lesson number 7, do not overmanage your position. Let's say you're a person that enters a position, and then you just check the charts every 5 minutes. And if you do this, you're going to doubt your own plan. You'll then close early and then re-enter in a worse position. So every adjustment to your position needs to come from logic, not emotion. For example, you buy one coin because it's on narrative, and then you check the chart and it's in the accumulation period, and then you check the chart that it's at support. Now, if support fails to hold, then you close the position. Very, very simple. Because now all of your decisions are made on logic, not emotion. Not because you're in the accumulation period and we're chopping and changing in this area here. Let's say if this narrative stops being popular and the narrative is dying off, for example, let's say meme coins have topped out, hindsight, and all of the meme coins are pulling back and they're not going to pump and volume's drying off, then obviously you're not going to invest in that token anymore because the coin is no longer on narrative. So then you need to stay patient, which was the previous lesson. And let's say if the coin is not accumulating in a sideways range and the coin is actually in a downtrend, then of course it's not ready yet. And you do not need to overmanage this position. Or if support breaks, then your thesis is not correct. This is when you just cut the trade. For example, you're in the range here and then the range breaks, then this is where you cut the trade on the retest. This is not a time to overmanage your positions. Let's say if it's in a range like this, and this range is 30 to 40% big, right? This is a 30 to 40% price difference. You don't want to be chopping in, out of your positions every single 5 minutes because of the 5-minute volatility. So what happens here is that there is a huge punishment for over managing your positions on an investment. Constantly buying and selling. Oh, maybe I'll try and trade this now to get a little bit more money out of this before the pump actually happens. And almost all of the time, you end up fumbling the bag. I saw this here at $100 million market cap on the DEX screener. And look, this is what happened. A 50% price drop then led to the pump to multiples of billions. As you can see, it was an extremely volatile coin. Even in this range here, right? This little drop was a 25% move before it went to $2 billion up here. And I saw a lot of people over managing their positions over a 20% dump in those ranges before it did a 20x and went to $2 billion. I saw it happen all the time. But because people couldn't just buy and hold, they tried to buy, sell, thinking that they were smarter than this. And then what happened is that they had significantly less gains and that they ruined their bull run. So lesson number 8, the market does not care about your past wins. If you made money before and lost it, the market does not care. And if you've been in crypto for a while now, the chances are you're going to be stuck comparing yourself to your old all-time high. If you've made $500,000 once, now you lost it, you're going to feel like you're failing until you get back to where you were. And then now you've got PTSD from all of your losses, which means you're scared to take risks again because last time that ended in pain. So now you hesitate and you second guess everything, and then you miss the best plays. You're trying to reuse an old, outdated playbook because you're trying to use what worked in 2021, but it might not work now. I see influencers all of the time holding old bags and still trying to flog a dead horse, still trying to make money playing the same old narratives and not making money this bull run. For example, DeFi hasn't done very well this cycle. Aave has done very well in particular. However, all of the other coins have not in DeFi. So therefore, you would not have made as much money as you should have this cycle. And take this from me. I had $5 million stolen from me in the FTX collapse. Of course I was pissed, and I wanted the money back fast. But I didn't chase what worked before. I wiped the slate clean. I studied the new narratives. I rebuilt my edge. And now I'm back with more money than ever before. And here's a tweet that I posted on the 13th of November. FTX was an exchange. I had all of my money on the exchange and it collapsed. And I was just left with 3,000 euros to my name on the 13th of November, 2022, and I've made it all back and more. Because here's the truth. The market doesn't reward your past, it rewards your current skill set. If you're still sharp and you're adaptable to the current market and you have an edge today, you will make it all back and more. But you need to learn this. The markets are irrational places. And there's a saying that the markets can stay irrational longer than you can stay solvent. And in crypto, this is 100% true, because a useless meme coin will 50x overnight. And then you invest in solid projects with revenue and real teams that will just bleed money for an entire year. So stop waiting for the market to act rational. Stop crying about fundamentals. This coin has the best fundamentals in the world. What you need to learn is that you need to learn to front run hype, emotion, and attention, because crypto is an attention-based economy. And that irrational behavior, it is the engine behind every single bull run. And that madness of people trying to chase the money is what will make you extremely rich if you position yourself ahead of it. So in a bull market, you need to be extremely aggressive. And in a bear market, be extremely passive. Because what most people do is the exact opposite. They hesitate in bull runs because they're scarred from the last crash. And then they overtrade in bear markets because they're trying to chase the previous bull market profits. For example, not many people buy the dip in a bull market. They think it's the top all of the time. Let's say a dip happens, a short 20 to 30% dip, which is quite common for a bull market. And then they scream that this was the top, it's all going to zero, oh my God, oh my God, oh my God. And then what happens is the price ends up going higher. Then the time comes when everyone says, oh, buy the dip, but that's when the dip keeps dipping. So then once a bear market does come along, they buy the dip and they get burnt all the way down. So if you're early to the market cycle, this is where you can put the most amount of risk on and buy the most amount of assets. But as the market develops and the cycle develops, this is the time to ease off on the risk and take some profits before the bear market comes along. And as I said earlier, you need a team around you, because every single hedge fund manager in the world has his advisors. George Soros made $9 billion on a single trade, whether you like him or not, when he broke the Bank of England. This was because he was given more conviction by his team around him. It removes all of the emotional nerves around every single trade. Let's say if you have hesitation pulling the trigger on a single trade, but somebody else has advised you to take that trade, it's going to remove all of that hesitation when pulling that trigger. And that's why every single crypto millionaire that I know has a group of people around them to consult with. One guy might be good at fundamentals, another guy at TA, and then another one at timing, hype, cycles, and narratives. So if you can build or join a team where skill sets complement each other, then that is your cheat code for this bull run. So I recommend you joining private communities or masterminds or inner circles, because this is where people post their top tier information first before it goes on Twitter. So what you need to also do this bull run is be quick to adapt and take advantage of opportunities, because this market moves extremely fast. What worked last cycle might get you wrecked this cycle. Narratives change, coins rotate, liquidity changes, and the edge isn't just in spotting opportunities, it's on how fast you act on them when you see them. Because crypto isn't like the stock market in the 1970s, where you can just buy something, hold it for years, and then retire. And this isn't a game of who's smartest. This is a game who reacts fastest when you see a great opportunity. Because coins and liquidity rotates very, very fast in crypto. For example, you could hold a coin for 6 months, it does very well for 6 months. Then the next 6 months, it doesn't perform as well. So the best opportunities aren't always that obvious. They're buried in early groups, Discords, Telegrams, and private alpha channels. So if you're relying on Twitter, X, for plays, then you're already late and you won't be fast to adapt because you're extremely late. And there are 500 million posts posted on Twitter every single day. So you could get drowned in all of the noise. And by the time you see it, 50 to 100,000 people could see that alpha. So that means you are late. The winners are surrounded by people who spot the rotations early and move fast together. So if you would like to buy the exact same tokens and take the exact same trades that I am buying this bull run and work with me one-on-one, then you need to join my 7-figure inner circle mastermind. I've already helped many people make 6 figures, and I've helped produce over 5 verified crypto millionaires. As you can see here, Novello went from being in debt to making over 6 figures in profits. Now debt-free, and every day seems so much easier. As you can see here, Jigsaw made $50,000 in his first month inside the inner circle. And Casper here, 3 months inside the group, bought a brand new BMW. Inside, my aim is to make every single crypto investor as close to 7 figures as I possibly can. So if you would like to join them, check the description below. And we're only just getting started because the bull run will not last forever, and we will continue to get rich inside while this bull run still lasts. And you can visit the description below to find out even more success stories that we've created and apply to work with me one-on-one. That's all for this video. I hope you have found great value out of this, and I'll see you all